Welcome to training for Volunteer Income Tax Assistance, also known as VITA. This is Session 6, Federal Tax Credits. This training is presented by the Franchise Tax Board's VITA trainers. Hi, I'm Jeanette.
And I'm Angel.
The Franchise Tax Board is proud to offer this series of training videos. This is the 6th of 11 sessions.
If you have questions, please contact your local VITA coordinator, but feel free to reach out to FTB's VITA team at 800-522-5665 or by email at volunteercoordinator@ftb.ca.gov. Thanks for watching.
Okay, let's get started. In this session, we will cover the federal tax credits. Let's begin by defining refundable and non-refundable credits. Non-refundable credits are a dollar-for-dollar reduction to the tax liability down to zero. Refundable credits are added to your federal refund. This means extra money in your pocket. The child tax credit is given to taxpayers for each qualifying dependent child under the age of 17 at the end of the tax year or a non-child dependent claimed on the return. The modified adjusted gross income limits are as follows. For single, head of household, and qualifying widower is $200,000. For married filing jointly, $400,000. For this credit, there are specific requirements including the child must be a U.S. citizen or a resident alien. The qualifying child must be under the age of 17 at the end of the year. They must be your child, stepchild, adopted child, eligible foster child, sibling, half-sibling, step-sibling, or a descendant of any of them. Also, the qualifying child should not have provided more than half of their own support, and the child must have lived with you for more than half of the year. The child tax credit reduces the tax liability and a portion of the credit may be refundable. The maximum credit of $2,000 per child is allowable, and a maximum of $1,400 may be refundable. The next credit we will be discussing is the credit for other dependents. For those who do not qualify for the $2,000 child tax credit, they may qualify for a credit of $500 per qualifying child. For those who do not qualify for the $2,000 child tax credit, they may qualify for a credit of $500 per qualifying person. The other dependent cannot qualify as a dependent for someone else. The other dependent must meet the requirements to be a qualifying relative, and the other dependent may not have more than $4,150 of gross income. You must provide more than half of their support. The dependent must be a U.S. citizen or a resident alien, and they must have a Social Security number, adoption taxpayer identification number, or individual taxpayer identification number. For the child and dependent care credit, generally, the child must be under the age of 13 unless permanently disabled when expenses are incurred. The child must also be your dependent, and the taxpayer must have earned income. A qualifying person can also be a spouse who is physically or mentally incapable of self-care. The care provider cannot be a qualifying child under the age of 19 or a qualifying dependent of the taxpayer. Child dependent care expenses. A maximum amount of $3,000 in expenses is allowed per qualifying child or person. They must be paid for the care of the qualifying person to allow the taxpayer and spouse to go to work or look for work. Please note that paying for kindergarten or higher grades is not considered expenses, except for after-school care. Paying for daytime summer camp is considered a qualified expense. However, expenses for overnight camps do not qualify.
Education credits. If your client had expenses for themselves, their spouse, or dependents for higher education, they may be eligible to claim a federal education credit. Let's talk about two different types. The first one is the American Opportunity Credit. This credit can be a maximum of $2,500 per student, of which 40% of the credit may be refundable. The qualified expenses include tuition and fees, course-related books, supplies and equipment, whether or not they were paid to the institution. The student must be at least a half-time student in a degree program, and the credit can be claimed for a total of 4 tax years. The credit cannot be claimed if they have been convicted of a felony for possessing or distributing a controlled substance. If your client doesn't qualify for the American Opportunity Credit, the next credit is the Lifetime Learning Credit. This credit has a maximum allowance of $2,000 per student. Qualified expenses include tuition and fees, course-related books, supplies and equipment that was paid directly to the institution as a requirement of the course taken. The student does not need to be full-time. They can take one or more courses, and these courses can be used to improve job skills or for a hobby. This credit is available for all post-secondary education. One thing to remember is that room and board is never a qualified expense for either credit. Please refer to the IRS Publication 4012 under the Education Benefits tab for more information. Earned Income Tax Credit. The Cashback Federal Earned Income Tax Credit, or EITC, is designed to help low-income families. Those who qualify for this refundable credit can receive thousands of dollars back on top of any regular tax refund they're entitled to. The EITC has been around for decades and rewards families for working. As a VITA volunteer, there's a strong likelihood you will meet clients eligible for this credit. This is a good one. It can literally change someone's life for the better. We've been at VITA events where clients are actually crying for joy once they learn the amount of the credit they qualified for. For the federal EITC, the maximum earned income allowed if filing single, head of household, or qualifying widow or widower with no child is $15,270. With one child, it's $40,320. 2 children, $45,802. 3 or more children, it's $49,194. If your client is married filing joint, the maximum earned income allowed with no child is $20,950. One child is $46,010. 2 children, $51,492. 3 or more children is $54,884. All taxpayers must have the following to qualify for EITC: a valid Social Security number. Their filing status cannot be married filing separate. They must be a U.S. citizen or a resident alien. They cannot be a qualifying child of another person, and their qualifying child can't be used by more than one person. While the federal EITC is important, be sure to take extra care to ensure the client is eligible. If the IRS deems the credit was taken fraudulently, the taxpayer cannot claim the credit again for 10 years. You have now completed the 6th of 11 volunteer income tax assistance training sessions. All sessions are available at Franchise Tax Board's website at ftb.ca.gov. If you have questions, please contact your local VITA coordinator, but feel free to reach out to FTB's VITA team at 800-522-5665 or by email at volunteercoordinator@ftb.ca.gov. Keep practicing, and thanks for watching.